And now China is looking to reform its pension system and to try something similar. The current returns have been too low, and authorities are considering investing as much as 30% of funds in the stock market. However, following the recent turn in the markets, that could be a little worrying for some. Hu Yun reports.
China's pension fund will likely be invested in the stock market. The Ministry of Human Resources and Social Security said over $320 billion can be used for multifaceted investments. The move aims to tackle the fund's shrinking value amid a fast-growing elderly population.
The current regulation stipulates that the pension fund is only allowed to be deposited in banks or invested in treasury bonds. This has played an important role in safeguarding its safety, but investment channels are relatively restricted. That's why the fund has been depreciating and people feel less enthusiastic in paying pension.
The suggested policy changes have received mixed reviews from the public.
I
heard the news from the radio. The pension fund's investment is a big deal, as we retirees all depend on it. So it is very important to ensure no loss of value. The government needs to be careful in choosing a good time to invest the pension.
I feel worried about putting the pension fund into the stock market, as the Chinese bourses are immature and unstable. I hope the government could invest more in the economy, such as infrastructure.
Chinese 65 years old and up make up over 10% of the population. By 2050, they could account for a third. The safety of the pension fund concerns the welfare of hundreds of millions, and the government now faces a major challenge in ensuring the safety of the fund's investment and the trust of those who depend on it.
The new guideline stipulates a 30% ceiling for stock market investment. Diversified investment channels will be used to reduce potential risks.
The pension fund will only be invested domestically and into mature investment programs. Besides, a risk reserve will be set up to offset possible losses.
An expert explained how other countries are dealing with pension fund investment.
One conservative way is to buy fixed income bonds like in the U.S. Another way is to set strict limitations on the programs and percentages of the investment, like what the Latin American and Central and Eastern European countries are doing. These countries share a similar investment environment with China and have managed the risks well.
Dr. Fang says China needs to diversify investment channels and impose strict supervision and regulation. He also stressed transparency in management. Hou Yun, CCTV.